Good morning and happy Friday to you. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note and also so that you have a little more time to plan your weekend. Let's start with the headlines. The Dow resumes its record run as some of the top US companies post strong results. The Nasdaq 100 climbs 1.3% while the S&P 500 ends the day 1% higher. No rating upgrade for India just yet, but the growth outlook is strong according to Moody's. They say this in an exclusive interview. Adani Enterprises' profit more than doubles on higher operating profit. Margins expand over 500 basis points to over 11%. Paytm responds to RBI action, says it will not disburse any loans. The stock ends the day 20% lower, wiping out over 9,700 crore in market capitalization. And Byju's major investors call for the ouster of Byju Ravindran and family from the board. US equities gained overnight on the back of strong earnings by a few of the largest listed companies in the world. The Dow gained over 350 points to close at another record high, while the S&P 500 and the Nasdaq climbed over 1% each. Amazon and Meta both announced better than expected growth outlook, while Apple reported notable weakness in China, and that affected shares in extended trading. Oil, meanwhile, has fallen after a choppy session as traders take into account conflicting reports on the progress of an agreement between Israel and Hamas to pause the war. As of this morning, Brent crude was trading at below $79 to the barrel. Remember, just not too long back, it was trading at over $83 to the barrel. In the Asia-Pacific region, you've had a mostly positive start, at least the early risers, two of them starting in the green. The Nikkei 225 was lower last I checked, but it has in fact gained ground. It is trading with gains of 1% right now. Let's talk about a few factors from the interim budget yesterday. And of course, it took center stage, and it was described at the end of it as a bond market budget. And the reason for that is the prudence that the finance minister and her team displayed in the setting up of the interim budget. Most prominent, of course, was that fiscal deficit number, 5.8% for FY24 and 5.1% projected for FY25. And what's more, the finance minister said repeatedly yesterday that she is confident of the glide path to below 4.5% in FY26. Now, this was music to the ears of a lot of bond market participants in India because this describes the government's shift from a spending-driven economy, and government spending at that, to a more pragmatic fiscal approach to managing the finances of the government. Now, why is that important, particularly this year? Because of the inclusion of India in the Global Bond Index by JP Morgan. In fact, here's my colleague Samina Samina Nalwala speaking with Jahangir Aziz, the Managing Director and Head of Emerging Market Economics at JP Morgan.
Announced yesterday. And also, this budget does go down as one of the shortest budgets in the recent history.
So first of all, it was an interim budget, right? And so, and they kept to the spirit of the interim budget, but didn't announce big tax policy changes, big expenditure policy changes. So I think we need to appreciate that even despite the fact that it was an election year, they did not go down that route. And, we always worry before an election year that, governments are going to go profligate. But if you look at the past 4 or 5 budgets, the government haven't done that. Even in 2014, when I'm guessing that the UPA governments were facing serious challenges on the electoral front, they stuck to the interim budget spirit. So in that sense, I think, the government needs to be applauded that they stuck to the interim budget's institutional integrity. In terms of, where, are the big sort of surprises, I would say that, we had a fiscal consolidation path where we expected that the government would target about 5.2% of GDP. Lots of people were skeptical about that number. it turns out that the government went better than that and is targeting a 5.1% fiscal deficit target. And I think that this is truly needed at this juncture, given, you can have quibbles about the growth rate, right? Whether it's 6.5, whether it's 7, whether it's going to slow down to 6, or whether it's going to rise to 7. But broadly, whether it's you're looking at the remainder of FY24 or looking forward to FY25, growth is broadly going to hold up in that range, right? And you still have, a reasonably strong disinflation that is continuing. Inflation is not yet in the comfort zone of RBI. But my guess is that if you wait long enough, it will get there, because most of the disinflation that is happening because of global supply chains have normalized and because China is exporting a significant amount of deflation at this point in time. And those things are in play even now. And then if the Fed cuts, depending on when the Fed cuts, whenever the Fed cuts, I think that opens up space for the RBI to ease monetary policy. So there was no real reason to provide any kind of macroeconomic support coming from fiscal policy. And therefore, that was the right thing to do, is to start paring on fiscal deficit and, sort of create the space for the next contingency that might happen. Who knows? We never expected the pandemic to hit us. And at the same time, try stabilizing public debt, which has actually been rising. And our estimates suggest that this year is going to be somewhere around, 83% of GDP, this public sector overall debt. Compare that to the pre-pandemic 70%. So we have seen a significant increase in public debt.
Jahangir, let's take this one at a time, right? The fiscal deficit number was truly a surprise, like you said. At least the path has been laid out. Now, how credible, how realistic this goal is going to be anybody's guess over the next couple of quarters and the next year ahead. The direction is in place. The borrowing numbers seem to please the bond market as well. Before we talk about the liquidity, the bond market, the inclusion on the JPM, do you feel like this budget now puts the onus on the RBI at its next monetary policy meet to do whatever it needs to, may or may not be in tandem or in line with what the Fed does?
I think it makes RBI's case to start cutting rates a little bit stronger. My guess is that RBI in the next meeting will do a Fed, which is to say that, look, we are comfortable with the pace of disinflation. A lot of progress has been made, but we still need to see few more data points before we are truly convinced that inflation is on a downward trend, and therefore essentially open the door for easing sometime this year, but not promise anything in the near term. But I think that an excuse, which would be that whether there hasn't not been enough amount of fiscal consolidation, that excuse no longer holds. So I think, yes, it puts the onus on RBI, but I'm guessing the RBI will do a J power of yesterday.
Wouldn't surprise us, because also largely the rate differential will have to be kept in mind. Apart from the local macros, I think if the Fed doesn't move, emerging market like India may not even be able to act in that direction. Let's move on from there. And I'm thinking the big trigger and the big talking point pre-budget and during the budget conversation that we had was India's inclusion in the JPM. Now, the anticipation is going to bring in $25 billion of money and liquidity into the system. Is that a fair expectation, Jahangir? I mean, you're sitting outside at JP Morgan, talking to more people than I can imagine. Give me a sense of what that means.
So that $25 billion is essentially arithmetic, right? So every month the weight of India would be increased at 1%. So in about 10 months' time, it will reach 10%. The amount of money that follows that index, the dedicated money that follows the index, is about $250 to $300 billion. So 10% of that is $25 to $30 billion. But there's more money, right? This is the off-index investors. And that is another reasonably sized chunk of money that will come in. So I don't think we should only look at the $25, $30 billion. We should look at something more. The question is, at what pace does it come in, right? And the pace in which the index money comes in. That crucially depends upon, as we were talking about, the interest rate differential. So unless you see a significant tick down in the 10-year US yields, discretionary money, which doesn't have to follow the index, can take its time. So I would say over a 2-year period, you should be looking at a reasonably sized inflow coming into India.
Do you also think this could be more directional, of course? So with India's inclusion in the JPM, there's also conversations that we might be in the Bloomberg bond index.
Sure.
Now, with this very strong commentary coming in where, you've got to wake up and notice India now, right? And the Prime Minister's done that. He's not just put us on the map, but he's also created a very credible growth dominated country. Could this also mean that with this 5.1% number, 4.5% target number in FY26, we could see some more inclusions come our way, and that could again spur up the bond market?
It's typically the case that...
So that conversation will continue, in fact, on our social media platforms. And if you continue watching this and would like to watch it later, you can catch it later in the day, of course. Let's turn to earnings now. And Adani Enterprises reported more than doubling of its net profit in the quarter gone by to over 1,880 crore rupees. In fact, very close to the 2,000 crore, or rather 1,900 crore mark. And here's, in fact, what Jugshinder Singh, the group CFO of Adani Group, had to say about the company's growth plans earlier.
In our Adani New Industries green hydrogen ecosystem, our target of 10 gigawatt green hydrogen integrated manufacturing ecosystem is progressing well. In addition to our existing 4 gigawatt solar module manufacturing capacity, we are now ready to commission India's first ingot wafer line of 2 gigawatt, a critical input for our solar manufacturing. We are also ramping up our recently commissioned wind manufacturing. We have already produced 15 sets of 5.2 megawatt wind turbines each. This is India's largest and have an order book of 142 sets. We have received a letter of award from Solar Energy Corporation of India for setting up annual electrolyzer manufacturing capacity of 198.5 megawatt. Civil foundation and flooring works are completed for testing and laboratory setup.
Now, a standard disclaimer here. NDTV Profit is part of the NDTV Group, which is owned by AMG Media Networks, which is also owned by Adani Enterprises, Adani Group rather. Let's talk about Tata Motors then. It is going to report its third quarter earnings today, and in fact it gained significance in a week when it has gone past Maruti Suzuki, albeit briefly, on market capitalization. It is likely to report a net profit jump of as much as 50%. To talk about why that is, Vinay is joining. And Vinay, I would think that this is on account of a significant rebound in performance by Jaguar Land Rover.
Yes, exactly. As you know, that JLR contributes around 60% of the company's revenues whenever we see any quarterly earnings from the company. So JLR is the reason that the company is turning around. So JLR sales, if you see in the quarter, excluding the China joint venture, rose 27% to 1.01 lakh units in the quarter. If you see the sales in the Tata Motors, that is the Indian company, the passenger vehicle sales rose 5%, while the commercial vehicle sales rose 1%. So you're clearly seeing that there is this divergence of growth in sales at JLR and at Tata Motors. So JLR is driving this profit jump of 54% in the quarter ended December. The management has already guided that the performance in the second half of the fiscal is going to be better than the first half. And that is because the healthy order book at JLR, new product launches at the passenger vehicle segment, and commercial vehicle demand will drive performance. That is what management has said. And if you see that this is also a quarter where we can say that we are now comparing profit with profit, because before that, for many quarters, we were comparing profits with losses, because this is going to be the fifth consecutive quarter where the company is going to report profit. That was Bloomberg's consensus estimates say. So this is a story of turnaround which has been completed, and now we need to see how the growth in profit takes on.
Absolutely. Vinay, while you're with us, why don't we also talk about the latest data on the volume front for India's auto manufacturers? We're going to see a few numbers trickle in today as well, but what can you tell us?
So if you have seen the data print, we can see that there is a clear divergence between what the data has come for passenger vehicles and two-wheelers and commercial vehicles and tractors. So passenger vehicles and two-wheelers have shown growth. If you see just in the passenger vehicle segment, the growth has come because of the inventory buildup, because it got depleted in December after car makers offered heavy discounts. It cleared the inventory at the retail level. So now they are sending dispatches to dealerships to build this inventory up again. So this has led to growth in the passenger vehicle segment. In the two-wheeler segment, the story of gradual recovery is playing out. And you can see that double-digit growth is there in the wholesale numbers of all the two-wheeler makers, except Royal Enfield, where there is a problem with the affordable segment of the company. So there you can see the growth is a little bit lower. But if you see the major pack, the double-digit growth is there in 3 companies. In the commercial vehicle segment, the sales have been lower just because the heavy vehicle sales are not contributing as much as we have seen in the last few months. In the tractor sales as well, the sales are going to be softer for the coming months as well. And this is because of the delayed sowing, and that has affected the agriculture activity in the rural areas.
Got it. All right. Thanks so much, Vinay, for joining in and giving us that perspective. We have to slip into a very quick break. We've got stock-specific news to tell you about on the other side, so do stay tuned. All right, welcome back. You're watching All You Need to Know. Let's talk about the stocks that you need to watch out for in trade today. In fact, we've got Mahanagar Gas among them to talk about, and Varsha is joining in to tell you more about that. Varsha, what can you tell us?
Good morning, Alex. So, as you rightly said, starting with Mahanagar Gas, it has acquired 100% equity in Unison Enviro at 562 crore. Now, this is company's first acquisition. Also, previously Ashoka Buildcon, an investment fund by Morgan Stanley, had equity in this company. Now, acquisition will expand core business of city gas distribution. Also, if you see, companies working with BMC to set up biogas plant based on municipal solid waste, and hydrogen EV renewables are adjacent areas to expand its energy portfolio. Next, we have NMDC, where we have business updates, where sales is up almost 19% year on year and production is up 8%. This is a monthly update, and if you see the cumulative update, production is up 16% while sales is up 23%. And lastly, we have Prime Focus, where they have approved raising of 4,000 crore funds through right issue. Issue prices set at 90 per share and record date to be notified later.
Absolutely. Thanks so much, Varsha, for bringing us those details. Let's talk about Interglobe Aviation then. It's expected to post a strong profit growth in the third quarter. and that is likely to be driven by improving passenger yields and also an increase in fare prices. Anushi Vakharia is joining in to give you some more details there. Anushi, what can you tell us about the performance of the company in the quarter gone by?
Absolutely. So if you had to look at Indigo's numbers, the street is expecting there to be some strong set of numbers with the revenue pegged at to grow about 22%, while EBITDA is seeing about a 27% increase. So this is on the back of the one-off events also which took place, like the World Cup event and some special festivities, which does fuel the Q3 in general. While we talk about the EBITDA is expected to rise about 27% to about 4,700 crores, while the margins are seen improving at about 26% compared to about 25%. This is on the back of the fuel prices now that they are incorporating, which is the increase with the introduction of fuel charge in their airfare prices. So this is again going to give a boost to their profitability. So that is another thing that we should be watching out for how that fares for the next quarter as well. For the key things that we should continue to watch out for is one is the industry consolidation that is happening with the grounding of several aircrafts over the last few months. So we have to see if there is some considerable market share gains going into the quarter 4. Along with that, we have to also watch out for the expected impact on the capacity guidance that they have given, which is expected to grow about north of mid-teens. So that is one thing we need to consider going forward. So that is the preview on Indigo.
All right. Thanks so much, Anushi. Let's talk about Jupiter Wagons as well as Texmaco Rail and more. They've all posted their third quarter results, and Mahima is joining in to give you some perspective on that. Of course, the railway stocks were a little bit disappointed in trade yesterday because of the lack of clarity on the spend by the government in FY25. But what about the earnings for the third quarter, Mahima?
Well, yes, the earnings for the third quarter have been very good for both Jupiter Wagons and Texmaco. If we talk about Jupiter Wagons, the margins improved to 13.6% in the 9 months FY24 versus that of 11.9% in 9 months FY23. This is on the back of strong order book and robust manufacturing facilities they have, and they've also acquired a lot of orders from the Defence Ministry, which is why the revenues have increased significantly. Then for Texmaco, if we see, the revenues have grown by 43% and profits have nearly tripled. And again, this is on the back of strong order book. So both these railway stocks have given extremely positive Q3 results. So these will be in focus today. Then we have IHCL, where IHCL recorded its all-time high consolidated Q3 EBITDA with a margin of 38.5%. It signed 28 hotels and 16 hotels opened in this fiscal year, and the robust performance for IHCL was enabled by same-store hotels clocking revenue per average room premium of across markets and segment. Also, they successfully launched the new Ginger Mumbai Airport Hotel, and they clocked an occupancy of 80%. And lastly, we have Bata, where Bata has missed the analyst estimates and their net profit has gone down by 30%. Sequentially also, their EBITDA margins have shrunk significantly. So this will be a stock to watch out for in trade today.
All right, thanks so much, Mahima, for bringing us those details. Titan was a stock that we were watching in trade yesterday. Towards the end of the session, you saw the earnings for the third quarter come through, and in fact, it lost ground towards the end of the session, ended with cuts of about 1.9%. There are a few brokerage reports that have come through for the company, and we've got MK that has in fact upgraded the stock. To tell you more about what they are saying, we've got Mihika joining in. Mihika, what can you tell us?
Yes, so MK has upgraded the rating on the stock from a neutral previously to a buy at a target price of 4,200. Now, Q3 results were in line with MK's estimates, and it said that the better margins in the carrot lane segment of the company offset a little slightly weaker margins in the watch and the eyewear segment. And they also expect the EBIT margins of Titan on a consolidated basis to remain in the 12 to 13% targeted band of the company. And they do expect a 29% net profit CAGR over FY24 and FY26. We also have a systematics report where the results were a marginal miss on their consensus estimates due to the slow jewelry retail business. Now, this jewelry retail business was majorly impacted because the inauspicious Shraddh period, the timing was changed in December, and the gold prices did spike higher. But the brokerage does think that the company will be able to gain 7% market share, given that there's a wallet shift to, travel and hospitality, given the post-COVID impact. And it does expect a 17 to 20% revenue and EPS CAGR for the company over FY24-26.
All right. Thanks so much, Meika, for bringing us those details. That brings us to the end of this particular edition of All You Need to Know. Do stay tuned. Lots more coming up before the start of trade, and you'll find all of that in India Market Open. This is NDTV Profit.